Palantir's earnings report is fast approaching. It's actually on Monday after the market closes. So let's go over most of the deals that happened during the quarter, what happened, price targets, what the analysts are expecting, what the company is expecting. Let's do all of that. Of course, we know that on Friday, most of the stocks took a hit. Most of the stocks also took a hit on Thursday. Right now, at the time of making this video, Palantir is down another 6.27%. But year to date, stock is still up over 40%. It's true that, let's say, in the last 5 days or so, stock is down 10%. Like you can see here, we started to dip on Thursday when the overall market started to turn because of, bad economic data. Well, now it's bad. A couple of months ago, it was good because it meant that the Fed will cut rates. Right now, it's just bad because the economy is not in a great shape. If we look at the average analyst price target right now, it still sits 5.4% lower than the price we're at today. It sits at $23.13. So remember that number so that next week when you do a recap video, we can see if it's higher or lower after upgrades or downgrades. If we look at some valuation metrics, so price to earnings, EV to EBITDA, price to sales, price to free cash flow, and price earnings to growth, these are it. This is also comparing it to the 4-year mean. So forth, PE 71.8 times compared to a 4-year mean of 92.8 times. Both of them, of course, not cheap, but a company has just become profitable the last couple of quarters, so things can change quite quickly. EV to EBITDA 54.3 times, price to sales 19.3 times. That's quite high, but I fully expect the company to have a reacceleration in growth for revenue, not just that 20%, but I do expect a bit more. Again, that's the expectations. Now, let's see if it's going to happen. Price to free cash flow in the last 12 months sits at 85 times. Then price earnings to growth 3.21, also not on the cheap side. And so before continuing, if you enjoy this type of videos, of course, do leave your predictions down in the comment section below. Do you think Palantir will beat, miss, stock goes up, down? Let me know down in the comment section below. Hit all the buttons, like, subscribe, notification bell on, do all of that. Would really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start going over a couple of deals. Well, most of the deals that happened this quarter. Huge thank you to Arnie who compiled the list on X. So we first go over the government and military contracts. A $480 million 5-year deal for the Maven Smart System prototype for the Army, $33 million contract by the CDAO to board third-party vendors. This deal indicates that the Department of Defense trusts Palantir's platform to manage a complex ecosystem of vendors. It could involve data integration, risk assessment, and performance monitoring. There was also a $31 million contract with the Air Force to provide a data-as-a-service platform, and $19 million for 2 years with ARPA-H to accelerate health outcomes with AI, $12 million deal with the Department of Energy, and a $5 million deal from the Federal Aviation Administration. As for the commercial partnerships, we of course had that partnership with Oracle. We also had a robotic combat vehicle prototype selection with Anduril, awardable designation for Tradewind Solution Marketplace, grant with Colorado Wyoming Regional Innovation Engine, also one with Proxe and Starlab, AMGI, which is the animation studio that you're seeing right here. Another one with HD Hyundai for unmanned surface vehicles or USV to replace manned ships. Parexel multi-year partnership for clinical trial AI. Eaton partnership extension and a 5-year Ringier expansion to deploy AIP across divisions. Apologies if I mispronounced the name of the company. So plenty of deals in the quarter, but as we know, just because we've seen these announcements or these new partnerships, deals, extensions during a quarter, that does not mean that we will see the impact this quarter or even the next one. No, this just gives us a good indication that things are moving into the right direction. So again, just because we've seen plenty of deals and announcements in the previous quarter or even the quarter beforehand, does not necessarily mean that we're going to see an impact already in this quarter. But of course, when they report the quarterly figures, you can always look at long-term, short-term RPO and see if we see some increases there. Last quarter, that was a point, let's say an orange flag. Well, orange flag. It's a number you want to see increase as well as revenue. Now, how do they increase those numbers? How do they increase revenue? Well, of course, with accelerated sales cycle. How do they do that? The boot camps. So these are the important things that were mentioned with regards to the boot camps last earnings call. Palantir has conducted over 915 boot camps to meet inbound demand, showcasing the significance of these boot camps in onboarding new customers and demonstrating the capabilities of AIP. AIP bootcamps have led to significant deal closures, such as a leading utility company signing a seven-figure deal just 5 days after completing a bootcamp, highlighting their effectiveness in accelerating the sales cycle. Customers have expressed that they could accomplish more in a day or two in AIP bootcamps than in a quarter or more without them, underscoring the efficiency and acceleration these bootcamps bring to customers' engagements. When it came to US commercial revenue, that grew 68% year over year and 22% quarter over quarter, again highlighting the significant commercial revenue expansion. The adoption of AIP by new and existing customers has driven notable growth in customer acquisition and revenue in the US commercial business. The number of US commercial deals closed nearly doubled from Q1 2023 to Q1 2024, showcasing accelerated deal flow and commercial revenue growth. Of course, we've been talking about bootcamps for quite a while. You've probably seen a couple of them on YouTube as well. It's a great way to basically expose existing clients, but maybe future clients as well, to AIP. What it does, how it can make your business much better, how you can grow faster than your competitors as well, and all of that in a matter of days, sometimes hours. Then here a Palantir employee posted something quite interesting. Another week, another opportunity to highlight something often misunderstood about Palantir. Palantir is not a consulting company. Palantir is a SaaS solution that has historically delivered with a forward-deployed engineer model. However, over half of my customers implement 100% of their own solutions on Palantir software. Over a third of my customers never had Palantir implement work for them. We do still have forward-deployed engineers or FDEs. They run bootcamps and go to the coal phase, remote drilling rigs, processing plants, mine sites, manufacturing floors, car rental centers, hospitals, and more, with our end users to understand the problem and deliver real value to a business. The interaction directly improves results for our customers and feeds the product development process. Very, very important to note. And so, looking at the expectations. So for the upcoming quarter, EPS normalized estimate of 8 cents, GAAP estimates of 3 cents. Revenue should come in at around $652.42 million. And the last 9 days, we've had 7 revisions, EPS revisions on the upside and 1 on the downside. As for the fiscal year, so fiscal year 24, 25, 26, as of Friday, August 2nd, these are the expectations. Sales $2.7 billion, growing 21.3% year over year in fiscal year 2024, and let's say around 20% in the next 2 fiscal years, so they don't expect any reacceleration. EPS growth for fiscal year 2024, this is EPS normalized, 33 cents, year over year growth of 32.5%. For fiscal year 25 and 26, again, around 20% growth. Of course, if you expect the company to grow faster, then the valuation metrics that we've seen before, the valuation numbers, will probably be lower since those are forward-looking. Now, the thing with forward-looking metrics is that they can change, right? We've seen that with Intel, for example. The forward-looking P in the next 12 months, looked quite cheap. Well, now it looks not that cheap anymore. So that's the problem when looking at those types of metrics. It's a good thing to look at, but don't focus your whole investment thesis purely on a forward PE, price to sales, price to free cash flow and stuff like that. Focus more on the business. And so last quarter, quick recap here, revenue increased 21% year over year. Cash from operations came in at $129 million with a 20% margin, adjusted free cash flow, 23% margin, GAAP EPS 4 cents, adjusted EPS 8 cents, adjusted EBITDA margin of 37%. US commercial remaining deal value grew 74% year over year and 14% quarter over quarter. Commercial revenue increased 27% year over year. Government revenue grew 16% year over year. We see also a reacceleration in government, which they have predicted, and I do expect that to continue in the upcoming quarters. Even though it's an election year, things will take a little bit more time, but I do think that the government, especially in the United States, is understanding that they need to spend more on software. US government grew 12% year over year and 8% quarter over quarter. Don't ask me why the 8 here is inverted. I don't know. Customer count grew 42% year over year and 11% quarter over quarter. Rule of 40 score of 57%, and cash equivalents, and short-term US Treasury securities of $3.9 billion. Now, for the upcoming quarter, they expect revenue of between $649 to $653 million and adjusted income from operations between $209 and $213 million. For the full year, they are raising their guidance to be between $2.67 and $2.68 billion, which is still a bit lower than what the analysts are expecting. Analysts were expecting 2.7, so maybe they'll raise it again this quarter. They're also raising their US commercial revenue guidance to in excess of $661 million, representing a growth rate of at least 45%. They also raised adjusted income from operation guidance to be between $868 to $880 million, and they still expect adjusted free cash flow between $800 and $1 billion. So let's see if, again, we can get a beat and a raise. Right now, if we look at the graph, yes, unfortunately, again, we've reached that $29 or so, and we got rejected there, or at least we did not find enough buyers. So just like in September of 2021, we went back down. Now, of course, like I said, Monday is the earnings after hours, so things can change quite drastically. If it's a small miss, let's say, small miss is enough to take the stock down 10 or more %, which will bring us around the 200-day moving average at around $21.63. If it's another great quarter, guidance is raised, then of course we could retest that previous resistance point. Me personally, I expect another strong quarter from Palantir. Will it be enough to convince the market to take that stock higher? Remains to be seen, I don't know. But right now, I am waiting. If the numbers are great and the stock goes down, to me, that's the perfect combo, because that means I can buy more shares of a company that just became better. So that's about it. That's the recap. That's all you need to know. Before Monday, of course, we are going to cover Palantir Monday after hours, probably do a live stream as well. So stay tuned for that. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.